Here's the story of a bearish trader who was selling into every single bounce. All his orders hit the bid. Such a sucker, sometimes you buy the dip. It's the story of a bullish trader who was buying each down tick he saw. He averaged down and rarely stopped out on the edge of blowing up. Until one day they subscribed to Routine Trader and realized they can do both buy and sell. That there are two sides to Mr. Market, and beating him both ways is pretty swell. Yeah, pretty swell, so very swell. Beating Mr. Market both ways is pretty swell.
Cheers to another trading day and a beautiful trading day, hopefully. Retail trading team, I'm Mastro and this is your routine briefing. August has been pretty fun so far. Yesterday wasn't so much fun for me. I did take 2 stops on my trades, yet happy to be involved after last week. Not too many trades last week, but definitely a lot of interesting tape, and today that trend, we'll say, continues. So we're going to jump right in, starting with our warm-up document and see what we got going on today. Lots of good stuff. I think a very tradable look if it plays out, but I'm definitely excited to join the party, hopefully shortly here as the day progresses. So first chart we're going to look at is actually going to be our warm-up document today. So I'm going to go ahead and drag this over, and let's talk about what we got going on here. So I'll go ahead and maximize this. Excuse me, and let's talk about it. So, inventory, down and net short. I love the positioning of this open for a few reasons. That's the first one. The second one is, you can see there, we're far beyond that downside of that expected move zone. So again, as we'll go into the weekly charts, we always do, the trend is still up. We are almost near the outlier level. In fact, let me just take a peek. I saw we're selling off a little bit. Yeah, so we're within 20 points of the outlier level. That is a 3 sigma level. What does that mean? 99.7% of the time we do close above that level. 70% of the time we actually close at least above that bottom of that expected move. So we're really in the outskirts of the bell curve starting off today. That does not mean that we can't go to the outlier levels. We can't sell off 100 points, obviously, yet I do like the look. I like the fact that we're retesting that low, and I think we're going to have a nice tradable looking day. Maybe. Fingers crossed. Don't want to jinx it. Yet you're seeing again with this open so far, you do have that open test drive, that bearish open test drive. Same thing that we saw yesterday. Again, we'll be looking for that unwind. We got to wait until 10 a.m. So 10 a.m. Eastern, another 10 minutes to confirm what that open is, but still looking very similar yesterday in terms of that open test drive, which can definitely be unwound. If it doesn't get unwound, the bears do have the edge. Yet conversely, which is another reason why I'm excited, is if we do pop back above the high of that open, which is going to be, let me just check here on the ES. Maybe if it'll load. If we do pop back above about that 11 to 12 area, not only is that showing a reclaim of that important 45-10 area, that is also unwinding that bearish open test drive. So lots of confidence if we get that. I will knife catch a little lower if I get a signal. Yet if you're one who likes to add to trades or wait for that confirmation, if we do get back above the high of that opening range, I think we're looking at a nice little bullish trade there. So we'll see what happens. This warm document, like all my other resources, is available in the description of this video, and you can check it out. I'll update it as the day goes on if it's necessary, which would just be the SPY area here or the open. We'll see. So the SPY levels today are pretty much the same as yesterday. In fact, exactly the same. I just deleted one that was less relevant. So again, clear SPY levels, very tradable. And let's look at what we got going on in the tape itself. So pushing lower, beautiful, is exactly what we want to see here. So what I'm looking for is, it's called the overnight low trap. I did not coin that. That is, I think, older than the hills in terms of trading terminology. So I want to see us pop this overnight low. Even better, really, for me, is if we try to fake break below Friday's low, and I'll be looking for that signal. If you go to my routine day trading document, again, in the folder in the description of this video, you can see exactly what that means to me and what I'm looking for relative to that low there. So gotta wait, gotta need that forward fractal reversal signal. So there's no rush to get involved here. Just nice little sell and hopefully a trap. Hopefully we get involved. I will not be playing trend today, even if we do pop this 85 level, which is super important. And that is because again, 99.7% of the time we close in today's case above that 80 level. So yes, it could be in the 0.03% of the time, but I do not take those bets uh, personally. If you do, good for you, and you might just get paid for it. So let us. I've seen volatility, lots going on, so I'm gonna jump right into the tape so I can get this newsletter out because we got a lot happening here. So weekly chart, same business. We did just make a lower low, so we're slightly lower here, about that 46 area, testing the top of that 4 standard deviation VWAP. We have been kind of seeing that active support a little bit during this uptrend. Yet really for me, that first major level on this chart here is going to be that 36 area. So 436, you'll see that in that warm-up document as well. On the weekly chart, that's really the first major test. Until then, we are in a state of imbalance. Bulls have complete control. What I really like about that 36 level as well, by the way, is you have the top of this trend line, which comes from the original high. So if we get a sustained sell, 436 looks like a decent buy. Yet I'll really be surprised to get there, and here's why. If we look at our daily chart as we continue a nice, beautiful sell, setting up a nice trade, I think, on the long side. Excuse me. Again, we did pop this low. This is delayed, so we are slightly below this. The low here is about 446. That is that level I'm watching. You'll see that on the warm-up document, and I'll just go ahead and change that to 446 instead of 446.25 right now. Get that going there. And why I don't think we're going to necessarily go all the way to 36 is I think we have a couple major barriers in the realm of support before there. First being 443 gap. We get that sell. Again, if it happens today, it's going to have to be an outlier sell. That 443 gap, I think, is going to be very strong support. Not only is that a gap fill, 50 SMAs right about there, and what else? The little line I've been talking about for seems like ages now, that 4 standard deviation VWAP on the daily chart. That would be a retest of that, and it would be a retest nearing that 50 SMA as well. So lots going on about that 43 area. If we do get that downside extension, be watching that level closely. On the upside, as I've been saying, not just the upside, but in general, Friday's candle, really important. You have that strong relative volume. You have that engulfing bearish, and it's just going to be important, I think, going forward. So watching what happens on Friday's candle as well. I see we're getting a bit of a bounce here, so let me make sure I don't miss the trade. So still got a bit to go there. So that's what's going on the daily. So let's get a little more granular and talk about intraday here a little bit. Let me check my notes, make sure I didn't forget anything. Okay, good. So let's go to the structural chart and see what's happening there. So lots of junk you can see here. These levels here are just the expected move zone, so they're not necessarily support or resistance, although today they do correspond to both. So really, I'm going to go ahead and make those white just for the purpose of this briefing so we don't get confused here. And let's talk about the other major levels. So the first is going to be a reclaim of this trend line, which is now about that 45.10 area. Like I said, to me, it's a really simple look. We get back above the high of that opening range. I'm seeing that as a reclaim, and I'm seeing that as confirmation that we're likely going to go a little bit higher. Could that fail? Obviously, anything can always happen there. Yeah, that's what I'm looking at on the upside. And then from 45.10 to about 45.30, I'm definitely expecting some decent chop. I think targeting this supply zone from 45.40 to 45.60, yes, that is a 20-point supply zone. I think it's really tough to pinpoint horizontals here. You got a lot of junk above. Yet again, above that trend line, I do like the bullish trade playing the reclaim. I don't have a target, just kind of letting that run according to the mechanics in that document, routine day trading document that I mentioned earlier. So below that, below Friday's low, this 44.85, you see a cyan line on the screen here, that is a line in the sand for bulls. So yes, you do have the 3 sigma hanging out about 44.80 there, yet what happens if we do start to accept below that 44.85 is I think we do potentially end up in that 0.03% of days, so we'll definitely be watching that closely if we lose 44.85. Until then, definitely excited to buy the dip. If we lose 44.85, I'll be looking for a reclaim, potentially buy the dip. Yet below 44.85, I think we just start taking out some supports, and we find supports, I don't know where, but potentially at the green lines, green horizontals you see on the screen, the solids are stronger than the dotted. Yet what usually happens on these outlier days, if you really do start to extend below, is it's definitely a knife through butter. So any trades is catching a falling knife, and I'm not personally going to be interested unless we get really extended and get near that 443 level on the SPY. That I will look to potentially fade the outlier dip. Yet really the ideal look is staying above 44.85 here and playing that reclaim, that fake break of Friday's low, that overnight low trap. It's really an A+ setup if we get it, in my opinion. So we'll see what happens there. Really, what I said in the newsletter, I would actually have to rewrite this before I send it out. I was saying how important it is to watch the volatility divergence / VX divergence. Well, we don't have that divergence anymore. In fact, we are currently above the level that I see as that breakout level, that 1780 level. So if you want full confluence and really to go from A- to A+, you want to see volatility fall back below the 1780 area, because above it, we are indeed breaking out. So I'll fix that in the newsletter, and I will package that up and get it out to all of you who read it. If you're not a subscriber, please go to retailtrading.com, sign up for that. I think it's a pretty good newsletter, especially it's free. I think it's one of the better free newsletters you will find for day trading the ES. And if you disagree, hey, let me know in the comment section of this video. Hey, let me know via a email reply, or even on Twitter. We can find me at Routine Trader. And you don't have to criticize the newsletter. If you want to engage, you can just engage in general. I would definitely appreciate that always, just like I appreciate those likes on this video. That does help the YouTube algorithm and our quest to get back to double-digit viewers. So please give it a like if you find this helpful. I would appreciate that. And you know what? I just appreciate your attention in general. If you are watching this, thanks for supporting and thanks for hanging out, and I hope you stay classy until tomorrow.